Good morning, traders. Hope everybody is doing well this week. Today, this CPI day came in hot. Markets are clearly unhappy with that reality. Despite, maybe we kind of all assumed that would be the case, right? You guys have been seeing it everywhere you go and you buy things. Everything's still quite expensive. How are y'all doing today? My name is Jason Krutzky. It is a pleasure to be with you for yet another TrendSpider office hours. If you have never attended an office hours, there are a few of you here. If you have never attended an office hours, the purpose of an office hours is to help you guys understand how to utilize TrendSpider. So if you have questions, if you're curious about something, if perhaps you're a new trader to the platform, maybe you took advantage of our Easter deal recently, or perhaps maybe you're on the sidelines. You're thinking about getting a TrendSpider account, but you're not sure if it is the right fit for you. This is your chance to get any questions that you might have answered live. Hello, good morning, Chris. Great to see you, sir. Chris from the Gary's group. Great to have you on. How are you doing today, Chris? What's the latest on your end? How's your trading going? And how can I help you? Did you have any questions for me today? I don't have an agenda today. I wanted to leave things very wide open for the sake of y'all and let you guys give me what you got. So, if you're new to these, we answer questions about anything that you're curious about. Could be building scripts in the platform, could be building strategies, could be where is this tool or that tool, or how do I use this or that thing. It's all fair game for me here. While I await your questions, I figure it's been a couple of days since we've talked. I'm not sure if you guys are signed up to our weekly mailing list. If you are not, I strongly recommend it. I'm going to grab a link for you guys really quick, just so that you have it. If you're not signed up already, hold on one second. I'm going to grab this. Every week we put out, interesting. Every week we put out a weekly blog post on Sundays. It's got, tons of kind of our favorite charts for the week and the most interesting things that we've found across the platform. It could be seasonality stuff. It could be insider buying or selling. It could be earnings related. It's kind of up in the air what we're going to highlight, but we highlight a lot of stuff. It's free. It goes out every weekend. So I want you all to have it. Here's a link. What's up, Andy? How are you doing, sir? So, I guess, if anybody has any questions, hit me with them. If you don't have any questions, I was kind of thinking, just kind of jamming around on the indexes. What we were noticing, or what we kind of were highlighting this past weekend, was kind of this 21-day EMA. 21-day EMA has been really important to all the indexes, really, specifically on the SPY. Very, very clear. Oops, let's remove all this stuff. This is all from the weekend update. But, 21-day EMA on SPY, we gained it back in November of last year, and we have not so much as even traded below it. We traded below it briefly at the beginning of the year in January. It was immediately bought up, and they've really had no trouble holding on to this thing. And then on the 4th, we closed below. Regained it very quickly over the past couple of sessions, and now we're trading back below it again. So this was kind of the warning shot that we saw, and it's kind of playing out. They closed below, they bounced, they failed to make some new highs, and here we go. And on RSI, we've been seeing this kind of bearish divergence for months now, right? Just slowly weakening under the hood. While price continues to grind higher. And of course, we all know price can correct through time as well. So, you don't want to just immediately jump into shorts when you see something like this because of this exact thing. It can continue going against you. But here we are, and it's kind of maybe perhaps starting to play out. This is a kind of a change of trend. You're seeing the EMAs flattening out where it's been nice and steep upcline for months and months. Now it's starting to flatten out, starting to trade below it, just suggesting that, we could have a little bit of rough waters ahead, even if we just chop sideways for a little while. Wouldn't be shocking to see. On the QQQ, same idea. QQQ, a little bit different of a relationship with that 21 EMA, but same kind of idea. Every time it's lost it, it's regained it pretty quickly, and prices continue to grind higher. But now we're starting to see it flatten out. Maybe potentially the next step is kind of rolling over here. Again, same look on RSI, right? Key momentum divergence there. Bearish divergence. And then on IWM, kind of similar. The least clean of all of them. But still a continuous move higher, and maybe now we're starting to flatten out a little bit like what we saw back in January. So kind of interesting to see that. If we go to seasonality, going back to the Qs here, and I'm just going to go to weekly seasonality just to see if we can kind of see anything that looks out of the ordinary. And don't really see anything here. I'm going to add something though, because I think that it's worth doing, especially right now. So where it says exclude periods, we can exclude periods of time. And it's an election year. So to me, it kind of makes sense maybe to exclude any non-election years to look for anomalies in these indexes. Election years tend to have strong effects on markets. Markets tend to perform kind of differently in election years than in other years. And so I think it's worth doing that. So I'm going to do it really quick. I'm going to say 2023, and you'll see as I'm adding years here, what it's saying is it's excluding those years from the calculation. We'll say 2018, 2017, 2015, 2014, 2013, 2011, 2010, 2009, 2007. So I'm leaving in just election years, and I'm taking out everything else. Oops, 1999. I believe I got this right. Every 3 years. 1998, 1997. '87, 6198. Would be better if I had myself a nice little sheet of all of these written down. But we could do it manually, just showing you how it works. So it's kind of interesting, this is 20 years of data on the Qs. This week actually has the lowest win rate of any week of the year, of any of this weeks of the year in election years. What does that tell you? That's actually really interesting information. Perhaps next week we have a better chance. We can also add mean change to this to kind of see, oh, this is kind of interesting too. Because look at mean change. Your mean change for next week in election years is actually one of the highest return weeks of the year. Whoa, that's kind of interesting. Your best week is here at the end, kind of at the end of the year. I guess this is like the end of November or so, maybe the first week of December. So this is kind of interesting. Perhaps what this is telling us is that we need to be looking for opportunities to be getting long this week, maybe on like really strong dips lower for a move, for a more powerful move, a more bullish move next week, some sort of reversal. I don't know if that's going to happen. We'll have to see if it plays out, but this is a pretty interesting reality here, going from the worst, essentially like the worst win rate of the year this week in election years to the highest return, or the second highest return week next week in election years. And you have a pretty high win rate next week too, 75% chance. Interesting indeed. Let's do something here. Let's kind of look around and see. The thing that I was using this for previously, same look. Y'all, look at this. Same look. This week on SPY, worst historical chance of a positive week. That's kind of cool. And then next week, 100% win rate in election years. with a mean change of 2.26%, which is actually, well, it's the second highest. Interesting. The second highest mean change. Oh no, third highest. This one. This one's your highest right here. Say that same last week of November, first week of December time. So what I was using this for, I know a lot of folks have been on the energy trade. We've talked about this a bit already. Perhaps you guys have heard us talking about this. This is interesting. If we go to month of the year, this is XLE monthly performance during election years. This is 80% win rate with a mean change of 10.54%. This is very clearly the best performing month of the year for election years and the highest mean change for election years as well. Not a surprise to see XLE so strong right now. If you were curious why it's so strong, well, it's historically quite strong during this time of the year. If we check out some of the major components, we see a very, very similar look to 80% win rate on CVX with a mean change of 9.71%. So like in a scenario like this, to me, it might make some sense to like, let me turn off this real quick. It might make some sense just to see kind of where are we at relative to that from last month's close to right now. We're only at a 2.4% move higher, where the mean change for this month is generally 9.71. And it doesn't mean that you're going to have that same sort of return this month on CVX, but that's a pretty wide discrepancy. We're only up 2.4%, and on average, it moves 9.7. XOM, same idea, same look too. 80% win rate, mean change 8.5%. Very, very clear picture being drawn here for energy. COP, again, as well. Not as high of a win rate as in August, but certainly the biggest mean change, 3.4 or 13.41%. It's big. Where are we at right now? 4.39. So, I mean, just the mean change suggests that there's quite a bit more gas in the tank for these guys going into the end of the month. But then once the month ends, you see that performance tick down, right? So this is something to keep in mind if you're bullish on energy. I'm not, I don't know that it's not going to continue higher. I don't know that with XLE, we are months and months and months. We're making multi-year highs here. Really, the only high that we have left to get is this 2014 high. So there's a lot of consolidation that's been going on over the past 2 years since April of 2022. This could just be starting. So I'm not saying that it's not, but it is kind of interesting to see kind of how the strength in April does kind of tend to decrease over the coming months. So perhaps maybe there's a trade there for bulls, or for bears rather, towards the end of the month. Maybe they go and they try and make a new high, and then there's things kind of cool off after they make a new high. I don't know. What are y'all's thoughts? I'm sitting here rambling on. What are you guys thinking? There's a few more of you in here. Are you curious about anything? Do you have any questions? Can I help you with something? What can I do for you? Brian, it's good to see you, sir. How's everything in your world? Yeah, please hit me with questions. Hit me with curiosities. If you have not yet said hello, please say hello. Let me know where you're tuning in from. These shows are really made better by you guys. I can only, I can only come up with so many things to talk about. But you guys being here means you're curious about something. So hit me with what you got. You got anything you want to look at? Another thing that I had seen when playing around with this election year seasonality idea, I was looking at tech because obviously, why wouldn't I? And really tech seems to shine more so in August, kind of towards the end of the summer. What's up, Larry? How are you, sir? Good to see you. So perhaps, early on this year is a time to be considering taking some positions in the old bellwethers like Apple, despite its relative weakness. Let me do this. I'm going to go to the NAS. Nice, Chris. You're in XLE. Cool. So we can kind of quickly just scan through this NASDAQ 100 list to kind of see Adobe here. Looks like August, best month. See if our ideas line up. Just kind of generally curious. AMD. Looks like August. Highest mean change in August of election years. Amazon. Decent couple of months towards the end of the summer there. Quite a few of these tickers I don't really know. Costco. Looks like decent end of summer historically. Cisco too. Brian, have long positioned in AEP, like lots of utilities, taking it on the chin and higher Fed rate policy. Utilities seem like a good sector for rotational upside. Let's take a look at them. I don't really know anything about utilities, if I'm honest. What I do know about utilities is they shut mine off this weekend because of a windstorm. And so I was out of power for 2 days, which is why there wasn't a office hours on Monday, because your boy, his house was freezing and there were no lights on. AEP. Okay, cool. Second ticker. So let's see how this thing does. Election years. Pretty average return performance over May and June. July seems to be the big mean change month. Last month was your highest win rate. Ooh, this looks tricky. Those equal highs here, back to the lows. This is tricky. I guess on the shorter time frame, this kind of looks like this. Equal highs, back to the lows, and then they just start to extend. Right. Yeah, you just said two words that don't resonate with me at all. Dividends. Well, dividends resonate, but that's not me. That's not my style. And long term. Dividends and long term are like two words that are not inside of my my trading stock market vocabulary. My personal stock market trading vocabulary. Well, let's pop through these. I mean, are there other names that are like the big names in the space? I don't really know. Just kind of looking now for like things of interest. All these seem really young. These companies, not tons of data. You're short DJT? You short the memes? Where's DJT at right now? Oh, getting smoked. Yikes. You had this giant fair value gap here that they were trying to fill. They came into it, kind of in here. It's probably getting pretty close to exhausted, though. It made new highs. Coming back into the low. This seems like a tricky place to be short. I'm not saying that they can't come back into all this stuff, though. They definitely could. Might be worth just seeing where your buyers are. All right, so that's kind of a feather in your short cap. Right, trading below anchored VWAP from where this move started. So you got a bunch of trapped folks. If they do try to bounce it, keep your eye on that, like 48 spot. Don't know where you're short from. But definitely worth keeping an eye there. I also like to do this. From the start of a move, I like to measure fibs. Oops. Let me add some levels. There's like a proper meme coin. Pulling back 78% from low to high. This is what they do. At least in the crypto world, the meme coins have this tendency. They make these big moves and they pull back somewhere between 61 and 78%, and then it's decided whether they live or die. Oftentimes they'll get a secondary move off of that like 78 level. Sometimes they'll move all the way back to the highs. Sometimes they'll get just below it and then fail and then die. Sometimes they'll just make a whole new leg higher. Just kind of depends. But tricky spot to be short here. Hopefully you've been short for a little while. POR and WEC. Let's check those out. Looks like the month here for POR is definitely December. December in election years, always positive. 3.77% mean change. It's a tricky one too. Failed new highs on the monthly. So really kind of suggesting continuation, making a new low between these. Oops. This one doesn't look super great. Can't lie. WEC. Ooh. Also tricky. Stuck below a ton of overhead supply. For sure. This kind of looks like, this whole section looks like Amazon 2021. However, next month, highest win rate of the year. Mean change, 2.14%. But you've got to assume that there is a ton. There are a ton. Let me do this so we can see a little bit better. There are a ton of sellers up at these highs. Let's do it from like here. Yeah, I mean, you got a ton of overhead supply there, which could be tricky to navigate. Doesn't mean it can't happen. What do these guys do? I don't know. What else you guys got? Anything else you guys want to look at? Oh, Larry, any good scans using a TTM squeeze? Is there a way to filter seasonality? So, John, there are lots of ways to filter seasonality. Larry, we'll talk about TTM squeezes shortly. But since we have been talking about seasonality, let's go ahead and talk about this really quick. So right here, John, I'm filtering seasonality by election years. So I have removed all non-election years. That's what all these numbers are. These are all non-election years. So I'm saying excluding all non-election years. But you can filter it by month of the year, by week of the year, by day of the week, and by hour of the day. You can filter it just by default, it filters to percentage change. So all this is saying is like if the candle closes green or if the candle closes red. So to kind of explain that, WEC here, 58% of Mondays close green, 43% of Wednesdays close green, 56% of Fridays close green, right? That's what those numbers are saying. So like you can think about this as, you know, maybe Mondays you're trying to sell into the strength, you're covering on Wednesdays. Perhaps maybe you're trying to go long on Wednesday to sell back on Friday. Or maybe you're buying on Wednesday, holding over the weekend, selling on this Monday strength, and repeating the process. But you can also filter this by relative volume. So how often does it have above average volume? Right? 41% of the time on Mondays, 43% of the time. Looks like Fridays are your highest chance for having this above average volume. You can say 2x above average volume, and generally speaking, these values are going to be very small. That's not a surprise. Friday is your best bet. You can filter for time above, with RSI above 70, RSI above 50, RSI below 50, RSI below 30, money flow index above or below 50, and then price above a 20, a 50, or 100 period moving average. So I don't know if that's enough filtering for you, but those are all of the different ways that seasonality can be filtered. And you can filter for periods too, right? You don't have to just filter for years. You could say like September 2021 if you wanted to. Like if there was, like COVID would be an example of a time when if you're testing a giant data set, maybe you want to remove some of these like real outlier instances or periods from that data set. That's how you would do it. Now, hopefully that is enough for you, John. Let me know. What's up? Why not? Good to see you here, sir. Hope you're well. So let's talk about TTM Squeeze. So TTM Squeeze on the platform is called BBKC. So the first thing we're going to do here, we're going to go BBKC Squeeze. And we're going to look at it. So I believe that we've talked about this before on one of the shows, but we can definitely talk about it again. Is there anything in particular that you're looking for when it comes to a TTM squeeze? Are you looking for a period of time in which it's squeezing and then the squeeze firing? You're looking for this flip from red to green or from green to red? What are you after? Any specifics that you can give me would be helpful. So what we could do, let me see if I've got anything here. So I've got a couple of things pre-built here. So with your squeeze indicator, you have the squeeze, you have comma signal and comma squeeze. And so the squeeze represents the dots, and the signal represents the bars. I'm pretty certain. Let me just make sure before I say that. Yeah. Oh, no, the signal. Oh, no, the signal's the dot. My bad. Signal's the dot. Okay, so comma signal is dot. So you can see what I'm doing here. It says crossed up on 0. So if the signal crosses up on 0, then what's happening is going from red to green. You could also say cross down on 0 on a constant value of 0. And this is going to find you green to red. So that's the first piece of the equation, right? You could, if you wanted to, you could say less than a constant value of 0. You could duplicate this. So I'm just duplicating it a bunch of times. So I'm going to say 1 candle go, 2, 3, 4, 5, 6, 7, 8, 9. So for 9 candles, this thing was less than 0, meaning it was red. And then we can add a parameter here. Actually, I'll just duplicate again. But we'll say it has crossed up on a constant level of 0 on the current candle. So 0 candles ago. So you've got at least 10 candles red, and then you've got your green bar here. But that only gets you one piece of it, right? That just gets you the squeeze. That doesn't talk about the histogram, where the histogram is. So if you want to talk about where the histogram is, you would want to utilize the squeeze. And so we can say crossed up on a constant value of 0. So let's see if anything comes up here. So now we're looking for 10 days of squeeze with a cross up on both the bar and the dot. Might not get anything. Wouldn't really surprise me if we don't. Yeah, it doesn't look like we're going to get anything. So perhaps then maybe what you want to do is you want to, I don't know, maybe say like within range of a constant value of 0, right? So that it's like that the bars are small. So a constant value of 0 or within range of 0 would just be like a bar that essentially didn't exist, like this right here. See how there's not a bar, a histogram bar here. And then you can define where the bar is, the length of the bar relative to that 0 line. So here we're saying it's within 1%. Again, we may not find anything. I don't know. Maybe let's say 5%. Interesting. You know what else we could do? Let's do this. I'm going to add a condition group. And I'm going to say that squeeze crossed up on a constant level of 0. And I'm going to say that it happened within the past maybe 5 candles. So you're getting that dot flip now, but you got the cross up just recently. Yeah, so here's your dot flip with 10 days of red. And here's your cross within the past handful of candles, within the past 5 candles. So that'd be another thought too. What's up, Gary? No, I don't want that job. Don't give me that job. I do not envy that man. Does this kind of help you, Larry? I don't know if like this is exactly what you're looking for, but perhaps we could even say maybe within the past 10 candles, we'll get a little bit more, a few more results. Oh, Gary. You forget that I've done this. I do this for a living. And that I've done this for 4 years. If I didn't navigate through the platform easily, I would be ashamed of myself at this point. Yeah, so maybe this is what you're after. This kind of looks like, I mean, just the setups kind of look like what you're looking for. There are some scenarios that don't look very good, right? Sam here looks like it might want to go make a new low. And there was another one, this one, making a new low. So what you may want to define as well within this is you may want to just define that, I don't know, something simple. You could say like price is above a moving average, right? In all of these instances, price looking like it's kind of above the moving average. Like you could define uptrend, or you could define, I don't know, today's high is greater than a couple days ago, or you'd kind of have to think through the fine details of what you're looking for. Let's do this. I'll send this. Shoot. So we'll say squeeze, squeeze with recent histo cross up. Save it. Let's update this. If you're just tuning in for the first time, we're building a little scanner for our friend Larry here, and I'm going to share it with him. Here you go. So now, Larry, you can load that into your account. You can utilize it, play around with it, and let me know. You know, like if it finds what you're looking for, great. And if you'd like to figure out some ways to refine it a little bit in a future session, let me know. Happy to help. All right, so John, how about a scan showing all 70% stocks for April? So you're saying you want to find anything that's up 70% from the start of this month? Yeah? Easy enough. You'd say price close. Price monthly close greater than price monthly open by at least 70%. You want to make sure this current candle's toggled on so that it's looking at this month's monthly candle and not the previous. And then just pick your list. We'll check the NYSE here. With something like this is a big move. Nothing in the NYSE. Wow. That's kind of wild. Let's check NMS. So here's a handful of names. Had a feeling that this list would be full of names of penny stocks. But yeah, here's how you do it. Hopefully some of you guys were in Nut Nutex. Up 1,000%. Jeez. Today. But yeah, this is how you do that. Clearly not a lot out there that's meeting this criteria right now. Not a surprise. And again, not a surprise to see that it's mostly just penny stocks and these random therapeutic stocks. These are the type of stocks that would do that sort of thing. Do you want this scanner though, John? Happy to share it with you. Or do you want to, I don't know, play around with it a little bit more, maybe make it a little bit more refined to what you're after? Like with something like this, what I would often do is I would define price. So I'd say daily price close greater than a constant value of X, maybe like $10 or $20 or something like that, depending. If you have, you know, minimums, you don't trade stocks below $10 or whatever. The other thing that I would do here is I would say indicator volume. And I would just use a moving average, like an average volume is greater than a constant value of X. And again, any number that makes sense for you, 250,000 shares a day or 1 million shares a day or whatever. And what this will do is it's going to reduce the results, but it might give you more, it'll give you results that are a little bit more like what perhaps you might feel comfortable trading. See how none of these names trade over. Only one of all those names that was meeting this criteria actually trades above 1 million shares per day. Is this Candle Therapeutics? Does that make this move more valid? Well, not necessarily, but if you have minimums, I always suggest that it's important to define them. Because the scanner isn't really all about getting results, right? It's about not just getting results, it's about getting the right results. And the right results for me may not be the right results for you, and vice versa. So I always encourage when traders are looking for things like this, just like big moves, I also encourage adding a few additional definitions, a few things that can refine what you're getting back. Worst case scenarios, you're getting back like too many names. You know, if I just made this like 5%, I know this isn't what you asked for, but if I just make this 5% right, now I'm getting tons of names. And this doesn't help me at all. What good does this do me? The scanner is meant to find things that I can that I can utilize right now. And this just did not do much work for me. I mean, yeah, sure, it found me all the names, or it found me a bunch of names. But then from here, if you go in and you add some simple stuff, price close greater than constant value, $10. So let's make it $20. And let's say daily volume is at least 500,000. So I'm going to get back more, realistic names. I'm going to get back a much smaller list, and it's going to be names that I would be way more willing to trade than the penny stocks that came back on the last scan. Hopefully that makes sense. So John, do you want me to send you this? Just this 70% mover? Happy to do it. No problem. Actually, I'll just do it right now for anybody who wants it. Plus 70% this month. Here you go, John. Y'all, we got about, 15 minutes? All right, Brian. Ciao, my friend. Hope you have a great rest of your day. Thank you for tuning in. As always, great to see you here. We got about 15 minutes. So if you are here and you have a question and you haven't gotten your question answered by me yet, please let me know. If not, if nobody's got any other questions, maybe I just pop out a little bit early. Not a big deal. If there are any charts that you want to take a look at, if you're curious about anything, we could do that. Any good strategies for trading an airline like Dow? Great question. So what I would do, if I'm just simply trying to find strategies that would work, first thing I'm going to do is I'm going to go and pull up a strategy that I know works on other names. This is one of my favorite little strategies. I know it's a little simple one. You guys have heard me talk about this before, this Netflix and Chats. I really like Chats Indicator because of the way that it, just the way that I can define it. So the first thing that I'll do, if I'm just trying to develop anything is I might go through a list of strategies that I know work on other things and just kind of see, like, is there anything out there that it performs well on? Can I use this strategy on Dow? So I'll just kind of like run through random things, and I'll be looking at the performance chart to see how the performance compares. I'll be looking at the win rate and just all of the tabular data. If I'm getting this no-go highlighting here, then I know that it's not a reasonable strategy to be employing. So I'll just kind of be comparing those values. Let's see. Just try some random things. So this is the first step that I'll kind of take. And, you know, a lot of times nothing will really work. Or a lot of times the results will be kind of mediocre. Meh. So we'll just keep on looking. Try some simple stuff. Here's an 821 EMA. All right. It was kind of interesting. Here you go. All right, so an 821 EMA strat on Delta over the past, what is this? What time frame is this? So it's testing a 2-hour time frame. The performance of this strategy yields 75.4% return versus an 8.2% return on the asset over the same period of time. So this strategy absolutely destroys buy and hold. We're looking back 7 years of data here. Over on the right-hand side, I'm going to rerun this just so we can lose all those tabular metrics. All right, this is kind of interesting. So on the tabular data side, 152 positions, your win rate is 34%, so it's not a super high win rate. You got an average win of 6.43, your average return of essentially 0.5%, with a risk-reward ratio of 2.66. So these are the two values that I'm kind of paying the most attention to. This average win looks nice, but the reality is your average return is the reality, right? You only win 34% of the time, but everything lines up to essentially make this like a relatively safe strategy to employ. There's no-go highlighting here. The thing that bums me out about this strategy is your max drawdown. You got a 44.4% max drawdown. Presumably, if you are utilizing a strategy like this and you're just letting a bot do the work for you, you just say, you know, and I want to run this strategy on Delta here. I'm going to launch it as a trading bot. A lot of why you would want to utilize a trading bot is to take the trades for you so that you're not having to do it yourself. You're not having to monitor and keep track and push the buttons. But also, you're kind of trying to avoid steep drawdowns like this. It's a pretty ugly little drawdown, 44%. The max drawdown on the asset over that same period of time, 70%. Presumably that was during COVID, right? When this thing really kind of took a big dump, and we can see it. And the strategy avoided that the big move lower during COVID. We know that because it highlights for us where our strategy was into and out of trades. So anywhere that's red on this price chart is our strategy in a losing trade. Anywhere that's green is our strategy in a winning trade. So we avoided COVID, which is nice. We tried to buy a handful of times during that big COVID dip, and they didn't work. We got this nice move in May coming out of COVID. We gave a lot of the gains up. So maybe there's a chance here for like refining this and kind of adding, because this is very basic, right? We're just buying the 821 cross up on the 2 hour. We're selling the 821 cross down. So where I would go with this is I would start kind of tooling around on potential alternatives for exits. Instead of saying I want to get out when the 8 crosses down on the 21, maybe we want to, I don't know, maybe you want to get out a little bit sooner. Maybe you want to try something different. Maybe you want to say, like, for my first thought is price closing less than the 21 EMA for a handful of candles. So we'll say, like, I don't know, 4 candles in a row. It closed below that EMA. Because we want to give it a little bit of wiggle room. We want to let it kind of like come in and you know, retrace a little. We don't want to get out too quickly. So we'll try this, see if that helps. Maybe it won't, maybe it will. I don't know. But the idea is just to like try things, right? So instead of using the cross down as our exit, if we sell essentially on 3 closes or 4 closes below that EMA, our performance goes down just a little bit. Now we're making 68% over that same period of time. Strategy still returns pretty nicely. Your max drawdown went down a couple percent, which is okay. The average return stays about the same. You took a few less positions. These red and green values here are just the comparison to the previous strategy that we just ran. So maybe there's another alternative here. Maybe this isn't really the right thing to do. Maybe we should go back to that cross down. So we'll say indicator 8 EMA, cross down. On indicator 21 EMA. I'm just using a moving average cloud for that. But maybe we want to also, let's do this. I'm going to add one more EMA. I think I have one up. Yeah. Oh. Let's do this, actually. I didn't realize I had a moving average cloud here. All right, so let's turn that on. Let's turn this off. The next thing that you might want to do, essentially why I'm doing this or why I'm kind of tooling around with what indicators I want to see, is I kind of want to just inspect, like visually inspect on the chart. So we'll turn these on. Kind of what does price action look like? You know? Like this is pretty ugly. This took us a moment to get out of this thing. So maybe we want to add some sort of stop loss. You know? Maybe a percentage stop. That might be too tight. Ah, there you go. So that kind of helped a little bit, adding just a small percentage stop loss. This is a 3% stop loss, increased performance by quite a bit, by almost double. Your average return went up by 0.15%. You're taking way more positions now. Your win rate went down. Your max drawdown went down though too, which is nice. So this is all proof, like the idea of having a high win rate does not necessarily equal a good strategy. Oftentimes there's a give and take there, right? The higher the win rate, the less you win, right? The next thing that I would do, once I found, you know, something that seems pretty optimized, I don't want to curve fit it too much, but we're going to see if we can. I want to really try and bring down this max drawdown a little bit more. 32% max drawdown is still a pretty sizable chunk. If I ever create strategies that we share, I'm trying to get that max drawdown to like less than 20% personally. And do whatever makes sense for your risk aversion. All right, so 2.5% stop loss yields us a 143% return. Win rate didn't go anywhere. Positions didn't go anywhere. Your max drawdown went down another 5.5%. So now your max drawdown's at 33.3. Your risk reward ratio is now at 3.25. That's awesome. You only have to win 1 in every 3.25 trades. Average return is 0.75%. The next thing that you would maybe want to do here is you might want to utilize the variance tester. So let me save. All right, so this is just an EMA bullish cross with a 2.5% stop loss. Okay, so I'm going to go to the variance. Actually, let's do this. And I'm going to save it. All right. So now we're going to launch this thing. And I'm going to test a bunch of different time frames. We know that we just optimized it for like the 2 hour, but perhaps this strategy could work on other time frames too. You know, we don't know. Maybe it works better on other time frames. So here I'm selecting a bunch of different time frames, 15 minute, 30 minute, hour, maybe the hour and a half, 2 hour, 4 hour daily. I want to run this as far back as I can. I'm going to run it on Dow. And I'm going to say compute. And what this is going to do now, this is going to tell me the results of all of those time frames, the strategy on all of those time frames. How does it tend to do? Oh, interesting. Oops. Let me turn that off and we'll just say 7,000 candles. So it looks like your net performance is kind of like relative to the asset. It seems that it's best on that 2 hour, 142 to 8.2. The best performance overall is the 4 hour, right? 196.9. But the asset, if you'd bought it and held it, gained 278%. So like we didn't beat buy and hold here, but it is the best performance. You're essentially doubling the amount of time that you're trading this idea, right? Your 4 hour time frame versus your 2 hour time frame. So you're looking back a lot farther in time, but still pretty decent yield. Looks like your 90 minute guy gave you the most positions. That makes sense. Your 30 minute had the highest win rate, or the most amount of wins rather. Your lowest max drawdowns on the 15 minute. That also makes sense because it's the smallest time frame. You're getting out quicker, right? Your risk reward is best on the 2 hour. We knew that, or we kind of assumed that. It's pretty decent on the hour and a half too. But again, the return on the hour and a half isn't bad. 93% versus a negative 16.1% on the asset. Like that's pretty good. But your max drawdown is a little bit elevated, 34.5. These are all just things to think about. You know, your average return on that hour and a half is 0.6%. So one of these three time frames may be the one that you want to employ. And then the next step here, right? We're testing Delta. Why not test all the other airlines, right? Maybe we want to test UAL. Actually, let's do this too. Since we've just determined the 90 minute, the 120 and the 240 are kind of the best, let's just stick to those, the 90, the 2 hour and the 4 hour. And then let's add some other airlines in here. UAL, AAL, I don't know, Save. That's one, right? Spirit. What's Spirit? I don't know. Hit me with airlines. I guess I could look if I wanted. I don't know. We'll just check those right now because I know that I know those. We can always check other ones. Hold on. What happened here? Oh, oops. I didn't add them. That's my bad. So we'll say UAL. We'll say AAL. We'll say Save. Okay. So Delta 4 hour performs the best of all of them. The Delta. Yeah, Delta is definitely the top performer across the board of all of these four airlines. UAL on the 2 hour does okay too. Let's see here. Your max drawdown on UAL, that's tough. 49.4%. Yeah, that's a little bit. That's way too high for me personally. Oh, JetBlue. Yeah, JetBlue, not really great. Really, Delta is the one. And really, that either the 2 hour, I don't know, the 4 hour max drawdown is pretty rough. As you get higher in your time frames, you would expect that max drawdown to go up. That just makes sense because, you know, now you're starting to talk about like the potential of a gap down overnight, right? You might have some sort of earnings thing that you're holding through and then price gaps. So that's why your max drawdown is decreasing as your time frame gets smaller, because it's more likely that you're getting out before some big whoosh lower. Yeah, so I mean, I don't know. That's kind of where my head is at with it. Your 2 hour or 4 hour 821 EMA, like it's a very basic strategy, you know, it's kind of no brainer. Very basic trend following strategy. Seems to work pretty decent on Delta. Gary, I appreciate the question. That was a good one. Anyway, you guys, I'm at time. So I need to get out of here and keep on keeping on with the rest of my day. It's been a pleasure hanging out with y'all. Thank you so much for hanging out with me. I appreciate it. I will be back again probably on Friday. There's a lot going on right now. What is what called, Girl Trader? This is the Variance Explorer. The Strategy Variance Explorer. This comes standard with all TrendSpider accounts. This is just a new tool within the strategy tester. So you can find it right here. So the idea behind this would be find a strategy, create a strategy, like build something on a name. We found that we built this one. It's very simple. And then we wanted to kind of optimize it, or we wanted to see if we could optimize it. We had kind of optimized it already, but then we wanted to see if we could optimize it for a particular time frame or a particular ticker in the same sector. So you just go to Variance Explorer here, and then you can, I could choose multiple strategies to test if I wanted, or I could choose multiple time frames to test if I wanted. I could choose multiple lengths to test or multiple tickers. You can have up to 30 variants per variance test. So, you know, 3 time frames, 1 strategy, 10 tickers, or whatever, you know, any, I can't think of the word, but you know, think in terms of 30. What's going to yield you 30 different results? And you can mix and match tickers, time frame, strategies. So yeah, so that's kind of like the last step of strategy creation would be, once you have something that you like and that works, then you maybe want to test it across a bunch of different time frames to see if there's any alpha in other time frames. At least that's how I think of it. Cool. So that's it. That's all I got. I hope you guys have a great rest of your day. If you're out there trading today, please be careful, be mindful. You know, things looking a little sticky. If you need me, you know where to find me. You can always hit me up on Twitter at Krutzky Trades. That's my Twitter handle. Feel free to, you know, shoot me a line if you got a question about anything. If you enjoyed this show, hit me with a like. If you don't subscribe already to the channel, hit that subscribe button. Then you can know when I'm live again. Again, I will try to be live on Friday. This week is a bit of an interesting week. One of my colleagues is having a baby, and well, his wife's having a baby, and so we're kind of helping him out and taking up some of his workload. So I may not be able to do this again this week. I'm gonna try, but I can't make any guarantees. If you see me go live, come join me. If not, I will be back again next week, early on. So yeah, have a great rest of your day, everybody. Thank you for being here. Holler if you need me. If you're not already a TrendSpider trader, what are you waiting for? Take advantage of the sweet little deal that I got in the description of this video. Yeah? That's what we got. All right, y'all. Have a great one. It's been a pleasure. Take care. We'll see you next time.